A buyer can have the income, the credit, the down payment, they can qualify for the loan, and yet the deal can still fall apart. Why? Because in an HOA community, sometimes the buyer's not the only one being qualified. The HOA may have to qualify too. And that's the kind of surprise no buyer wants to discover halfway through an escrow. After they've spent the money, after they've invested emotionally, and after they've already started picturing themselves in the home. Today, I want to talk about why that happens, what lenders may be looking at, and why both buyers and sellers need to understand that sometimes having a qualified buyer just isn't enough. Hi, I'm Frank Spencer, Mr. Chatsworth, and on this channel we talk about real estate, local lifestyle, and the practical issues that can quietly affect value, financing, and whether a deal actually makes it to closing. And this is one of those issues, because when you're buying or selling a condo, townhome, or any property tied to an HOA, the community itself can become part of the financing conversation. Most buyers, well, they just never see this coming. Most buyers assume that if they qualify for the loan, they're in good shape. And that's how most people think about financing. They think about income, credit score, debt to income ratio, and cash to close. And yes, all of that matters. But in an HOA transaction, just may not be the whole story, because the lender may also take a hard look at the association connected to the property. That means the buyer can do everything right, get into escrow, begin making their plans, start imagining life in a new home, and then find out that the property itself doesn't qualify because of issues tied to the HOA. That's the kind of surprise that can kill a deal. Why the HOA matters to the lender? Well, simply stated, the reason is actually pretty simple. When a lender makes a loan on a condo or a townhome in a common interest development, they're not just looking at the unit. They may also be looking at the project. They may ask questions like, is the HOA financially stable? Are their reserves strong enough? Is there deferred maintenance? Are there special assessments? Is insurance adequate? Are there issues in the community that create added risk? Because if the association is weak, underfunded, poorly maintained, or financially stressed, that can affect the long-term stability and marketability of the property. And lenders care about that. So while buyers think they're buying one home, the lender may be evaluating the health of the larger community also. What this looks like in real life, this is where we get real. A buyer finds the right property, they get excited, they write the offer, and hallelujah, it gets accepted. They start spending money, they start making plans, and then somewhere in the middle of the escrow, the lender reviews the project and something just doesn't sit right. Maybe the reserves are weak. Maybe the budget raises questions. Maybe there's deferred maintenance, or there might even be an assessment. Maybe there's an insurance issue, and suddenly the conversation changes. Now it's no longer does the buyer qualify. Now it becomes, does the property qualify? And that's a very different question. And it can hit buyers and sellers right in the middle of escrow when they least want it to. If you're a buyer, this is why you can't stop your due diligence at the unit itself. Yes, you should care about the condition of the home, the layout, the location, and the monthly payment. But you also need to understand the HOA, because if the HOA becomes a problem, it may not matter that you personally qualify. That's why buyers should ask for information early. Things like the HOA budget, reserve information, any reserve study if available, special assessments, insurance information, signs of deferred maintenance, and any known issues affecting the community. And to be honest, the seller generally is required to provide this for you. But to also be honest, buyers rarely read this information, and they should. Because the earlier you understand the project, the less likely you are to fall in love with a home that may be difficult to finance. Now let's talk about sellers. This matters to you just as much because you may think you have a qualified buyer, and maybe you do. But if the HOA creates financing problems, you can still lose the deal. And that means your sale is not only dependent on price, condition, negotiation, or buyer strength, it may also depend on whether the community itself can pass the lender's scrutiny. And that's why sellers in HOA communities need to understand something very important. Your unit doesn't stand completely on its own. It's tied to the association. And if the association has financial maintenance or insurance issues, those issues can affect the marketability and value of your home and impact your ability to close. So before listing, sellers should understand whether the HOA is well funded, whether assessments are pending, whether there are known maintenance problems, and whether anything in the project could create a financing question. Because it's much better to know that early than to discover it after you've accepted an offer. This is one of the reasons I think this issue matters so much. Because when a deal falls apart over financing tied to the HOA, it's not just a technical problem. It's an emotional problem. The buyer's already invested hope, they've imagined the move, and they've started picturing their future in the rooms. They have begun planning on the next chapter of their life. And then suddenly, because of something they may never have thought to question, the deal starts to wobble. And it's hard on buyers, but it's also hard on sellers because sellers may have already started planning their next move. That's why this issue deserves more attention than it often gets. And it's not just about paperwork. It's about protecting the transition before people get too far down the road. What buyers and sellers have to do, well, if you're a buyer, ask questions about the HOA early. Don't wait until the back half of escrow to start understanding the association. The earlier you review the budgets, the reserves, the assessments, the insurance, and the general condition of the community, the better. And if you're a seller, get involved. Don't assume that a qualified buyer is enough. Getting involved means understand your HOA's condition long before your listing and make the tough decisions, because if there are issues that could affect financing, you want to know them early and plan accordingly. And if you're on an HOA board, understand that the financial and physical health of the community doesn't just affect maintenance planning, it can affect the marketability, financing, and whether owners in the community can sell smoothly. If there's one thing I want people to take from this, it's this. In an HOA transaction, the buyer may not be the only one being qualified. Sometimes the HOA has to qualify as well. And if buyers and sellers don't understand that early enough, they can find themselves deep in escrow with a deal that suddenly becomes much more fragile than they expected. Because a qualified buyer does not always guarantee a qualified transaction. Now, if you're buying or selling a condo, townhome, or property tied to an HOA, ask the hard questions earlier. Not just does a buyer qualify, is the price right, or does the home show well? Also ask how strong is the HOA? Are there reserve issues? Are there any special assessments current or pending? Are there maintenance or insurance concerns that could affect financing? Because the sooner you know the answers, the better the chance you have of protecting the deal before emotions and money get too deeply invested. And if you found this helpful and you care about making smart real estate decisions here in the Greater San Fernando Simi Valley. Please make sure to like, subscribe, and ring that bell. And if you're thinking about selling, well, I wrote a guide called Avoiding a Failed Sale: How to Sell Smart and Walk Away Without Regret. And you can download it for free at www.mrchatsworth.com/ebook. If you have any questions about HOA communities, condo financing, or the kinds of issues that can quietly affect the transaction, drop them in the comments. I promise you, I read each and every one. And until next time, I'll see you around the neighborhood.